Aloha folks, thank you so much for checking out this video. If you're new to the channel, just wanted to say aloha. My name is Mark, Mr. Dividend Investor. In this channel, we look at many different types of companies, primarily dividend companies. So if that's something you're interested in and you want to learn about which great companies that give great dividends that you want to possibly invest on to put on your portfolio, you definitely come to the right channel. Hit that like button, hit that subscribe button, and don't forget to hit the notification bell so you don't miss out on these videos that I put out. With that said, let's take a quick look at this company. So this company is a company that has been giving dividends for the past 11 years, and for the last 10 years has been had a dividend growth of 21% per year. So sit back, enjoy it. Again, this is not financial advice. With that said, let's check this out. So the company that I'm talking about is Starbucks, ticker symbol SBUX. I really like this company. I am a consumer. I definitely go to the store and buy their coffee. It is expensive. However, it is a brand. It is a coffee that I enjoy. One of the things that when I talk to people and say, hey, Mark, which one do I start investing on? I always tell them invest in companies that you are a consumer of and you understand the product. So for me, this is a product and this is a company that I enjoy being a customer, and officially I am investing on them. So this is a company that engages in production, marketing, and retailing of specialty coffee. So probably a lot of you guys know about this company as well. It is a well-known brand. One of the things I noticed is that they also partner with Uber to do the deliveries. So let's take a look at Simply Safe Dividend and check out some of the stats. Based on their dividend safety score, they rate Starbucks as safe in a score of 67. The dividend yield is 2.606. Market cap is about 109 billion, considered a mega cap. Looking over the key metrics, you can see payout ratio is about 56%, which is edging higher for restaurants. Forward payout ratio is about 56 as well. They didn't pay any dividends during a recession. So if we go to the dividend growth, checking out the stats, the last 10 years, 21% per year, which is very fast. Last 5 years, 17%, which is also very fast. And then you got your latest, which is almost close to 9%, which is fast. Now, if you look at that, starting at 209, you can see the upward trend. So hopefully it will continue. Their dividend growth streak has 11 years consecutively without a reduction as well as increases. Now for payout details, you get paid out quarterly in the months of February, May, August, and November. Ex-dividend date is February 10, which is about 1 day ahead. So remember, on these ex-dividends, if you want to get the dividend, you try to do it before the ex-dividend date. So to be safe, so if this is February 10, I would probably buy on February 9 so that I can get my dividends on the February 12th. So, and your annual payout is $1.96. Now looking down to some of the valuation based on Simply Safe Dividend, the stock may be reasonably valued today. Now moving along to some of the key metrics. So I like to look at the sales growth. You can see it's up 31%. Earnings per share, it's been down so for the last 12 months. So we'll see how that goes. Looking at the return on invested capital, you can see the last 12 months is up 32%, and the return on equity is a negative 54. So those are some of the stats. Now if we take a look at tip ranks, at the time of this video it is 95. Their analysis rating is moderate buy. You have 13 buy, 11 holds, and 0 sell. Their price target is in the high of 116 with a 22% upside. 12-month forecast rated as a high of 136. 116 is the average, and then 100 is the lowest target. Now, if we look down to some of the analysis and look at whether they see the upside and the downside, you can see most of them are pretty bullish on this company. You can see a lot of it is upside, with some as low as 11% and some high going to 31. Yeah, you got your 5% in here, but pretty much everybody has a bullish that it's going to go on the upside. It's going to go higher than what it is happening right now. So check out Webull. So if you are looking for a platform to start your investment journey, definitely consider Webull. Right now they start doing fractional shares as well, so you can invest in your favorite companies and ETFs as little as $5. So the link is in the comment section, so definitely check that out. Now if we go to Webull, based on their analysis, 37 of the analysis rated as a buy. So mixture of holds, about 51% said it's a hold, and you got your buy percentage, which is 21, strong buy, which is 24. Price target is in the high of 136, the average of 115, and then you got your low of 84. Now if we go to CNN Business, based on their price forecast, they have a high of 136, the median 115, and then the low of 100. And then if we look at the analysis recommendation, you got about 15 buy, 2 outperform, 17 holds. Now if we go through the top 10 owners of Starbucks, you can see the share stockholders. You can see Vanguard, they bought about almost 1 million shares. And then you got some BlackRock sold about 241. It's a mixture, so you got T. Rowe Price bought about 1 million. And then you got all these other guys that sold some of the shares. Now if we go to Barchart, looking at their price target, it's in the high of 142, the mean of 122, and then the low of 105. Their analysis rating it is a moderate buy. If you look at the chart, it's been a moderate buy the past 3 months. Based on 27 analysis, they rated it as a moderate buy. Ratings breakdown currently, based on 27, there's 14 strong buy and 13 hold. Now if we go to in-depth more, you can see the bar chart technical opinion. They have a strong sell right now. Now if we go down further, you can see some of the key turning points. You can see some of the support level. It's about the 94. Second level would be the 94.16, and then you got your third supporting level, which is 93.45. So if it continues to go in a downward trend, kind of look at those numbers. Now if we swing by to Simply Wall Street, based on their analysis of share price versus fair value, they rate this as 2% undervalued. Based on their calculations, fair value is at 97.92, and the current price is about 95.19. So it's in the about just right category. Now if we go to some of the company overview, you can see established dividend payer with proven track record, and then some of the negative risk is that share has a high level of debt, significant overselling the past 3 months. Now if we go over to Nasdaq, looking at some of the inside trades, you can see last 3 months it's about 8, 12 months is that same number of sales, total inside trades. So you can see some of the boughts and solds in here. So if you want to take a look at some of these things, go to nasdaq.com, type in the ticker symbol, and you can see a lot of these things. So you can see some of the sales and trades of these guys right here, these people like Lisa Angela and Liz Angela, sorry. Now going along to Yahoo Finance, you can see I wanted to compare how has Starbucks been versus the S&P 500. You can see it's been underperforming, so it's on a downward trend, just like you could see over here. So I expect a little bit more to go down more. Again, probably 94 maybe and stuff. So now moving along to Robinhood, based on their analysis. If we go down to here, you can see it is 50-50. It's about 50% buy, 50% hold. Now, based on their fair value assessment, they rated a fair value of 106. Now, swinging along to the performance, you can see for the week it's down 2%. For the month, it's up down almost 10%. 3 months, it's down 18%. For the year, it's up 10%, negative 10%, and then for the past 5 years, it's up 73%. So I started buying it at the 95, 78. So I have about 4 shares. Total return is about negative 0.3. I'm gonna continue to buy it, but I'm going to nibble, not necessarily buy a whole bunch of it, just 1 or 2 here and there, trying to dollar cost average. Probably my goal on this company is to get maybe about 50 to 60 shares, and then try to dollar cost as much as I can. I like this company. I think it's a great company to invest on, in my opinion. We'll see how it goes. I do expect it to, depending on the market, if it goes down cheaper, great. But my strategy right now is to dollar cost average and get to my current goal of 60 shares, and then that's probably it for me. All right. If you have Instagram, check me out on Instagram. Same name, Mr. Dividend Investor. Also, if you want to check out the other videos, I have a lot of videos with other dividend companies. Definitely check that out. As always, please remember to do your own research, due diligence. Please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.